Thursday, July 16th, 2020, Maneco 64, home of alternative economics and contrarian views. So as the economic uncertainty increases with this engineered non-crisis of 2020, the bankers are going to continue to rake in the billions, mainly because of the way the financial monetary system is built up. It sucks the wealth in the future, basically, of the general public through taxation, through debt that's backed by the taxpayer, and it injects that credit into the banks. They're the brokers of the system. That's why JP Morgan, Goldman Sachs are doing so well from this crisis. It's not because they do anything that's really special or productive. No, they are parasitical, actually, because that's what happens in the fiat currency system. The bankers, the banks, the politicians, they benefit from this. It feels to the public that there isn't a problem because the debt is just put out there. The debt has to be paid by future generations. It's not really felt right away, so people think that everything is okay. They don't understand how credit or fiat currency is created. They just know that they're receiving extra checks from the government every month, and they're really happy that they're being subsidized while they don't work, while they bring the economy down. Why do they want to bring the economy down? Well, because that's the model for the central banking model. It's a pump and dump mechanism to own the world, and they're doing a very good job at that. Of course, the way to protect yourself, if you've been able through your lifetime to save some wealth, is, I think, staying out of this system. It's not playing their game, not taking their offers or their enticements of cheap loans. It's trying to live within your means, trying to keep stacking precious metals, trying to pay off any debt that you might have. And of course, the most important thing, in my opinion, for someone to basically have financial peace of mind is to always produce more than you consume. Yeah, the Keynesians think that consumption and debt is the key to the economy, but they forget to tell you that in order to consume, you need to produce. And as long as you produce more than you consume, I think you should be okay. Don't ask me how. I mean, everyone's different. You have to do what you have to do. And don't fall for the game of the bankers, because basically what they've done in this crisis is consume the wealth of futurity. That's an old word. It means of all the future generations. They're going to be paying for this. If something is not done about the system, of course, there is a way out. The way out is to allow the free market with no monopoly central banking power, allow the free market to decide what money is, and let the people control the money supply. And that's usually done through the free market, not through government, not through a government created monopoly like the Federal Reserve or the Bank of England. So I'm going to look at a couple of articles. They're both from the FT, and I know it's a globalist organization, but you can still use the enemy's information. It's just a way you interpret it that's important, I think. So this morning we've had more bad news for the UK economy. It's not surprising, but I think it's going to get even worse. I think they're really hyping up a second leg or a wave of this crisis. The uncertainty is going to continue. People are scared. People who don't really know what's happening and what the whole agenda is all about. So it says UK sheds 650,000 jobs during coronavirus lockdown. Workers' earnings dropped for the first time in 6 years, despite stimulus program. And the thing about these programs, it's that they're going to phase out very soon here in the UK. And from what we're hearing now from the government, from the Bank of England, it's doubtful whether they're going to continue pumping the monetary and fiscal stimulus. We will have to see, though. So let's go through this. The data came out this morning. The UK has shed more than 500,000 jobs during the coronavirus lockdown, while employees worked fewer hours and earned less, despite the government rolling out numerous measures to support the economy. The number of UK payroll employees fell by 650,000 in June compared with March, a 2.2% fall according to figures from the ONS, or Office for National Statistics, based on tax data. The statistics body said, however, that the rate of decline in employment had slowed in June compared to May. That's not surprising because they've been loosening some of the lockdown conditions. And I quote here someone from the ONS: there are now almost 2/3 fewer employees on the payroll than before the lockdown, according to the latest tax data, said Jonathan Atho, ONS Deputy National Statistician for Economic Statistics. June's ONS labor market statistics pointed to a deterioration across various measures, despite a government program that supports 9.4 million jobs and 2.7 million self-employed people. So when these programs, the furlough program, of course, that's what they're talking about here, when that phases out, I think it's in October, it will be interesting to see the percentage of those 9.4 million jobs that are going to disappear. Even if it's just 10%, that would be almost 1 million jobs. So things are not looking great. The job scheme is due to be phased out in October, prompting concern that Britain could face a further surge in unemployment in coming months. You would think that if the government, the powers that be, the Bank of England, really wanted to get the economy going, they wouldn't be scaring people like they are still about a second wave, about the new tests, about wearing masks. They'd be saying, don't worry, the virus is gone, let's go. But the thing is, they've scared people so much. The lie has been so big that they can't backtrack anymore. So I don't see the economy improving. I see it getting worse, unfortunately. So we're going to be lumbered with huge amounts of debt that they already created since March, and the economy is going to be going nowhere. That's a recipe for stagflation. That's a recipe for maybe even more money printing from the Bank of England. Who knows? Yes, they're coming out and saying that they can't keep doing it forever. But if the crisis persists, they'll have to. In the 3 months to May, total weekly hours worked in the UK decreased by 16.7% to 877.1 million hours, the largest annual decrease on record. Average weekly earnings dropped 0.3% from 2.9% in the 3 months to February, marking the first contraction since 2014. Depressed activity levels and the deterioration of the labor market prompted the government to announce last week further support for jobs, with £1,000 payment for employers who bring back furloughed workers, and funds to create jobs for young people. We'll see if that will work. Is it really worth employers taking that £1,000 and then having the cost of employing people, which is probably going to cost them even more? And even though also the economy is not doing well, They might do that, but eventually they're going to get rid of the employees, I think, because it's not going to get any better. So here's an article that points out to what I said, that the banks are going to benefit. And Jillian Tett here is talking more about the Federal Reserve, that it's the central bank. But she forgets, of course, how the Federal Reserve taps that credit that they create out of thin air. Yeah, they do create it out of thin air, their reserves, but it's implicit that it's the taxpayer that backs the debt. They're the ones whose currency is diluted by the creation of more money and credit. They're the ones who are going to have to pay the tax to keep financing that debt going forward. And that of course, which is now at 26.5 trillion, which is now at 132.56% of GDP, that's never going to be paid off. The only way to pay that off is to basically issue more debt and keep the Ponzi scheme going, because that's what it is. It's a Ponzi scheme. And for 2024, they're forecasting the national debt at 45.1 trillion, or 168% of GDP. I think that 168% of GDP is going to go higher. Why do I say that? Well, because I think GDP is not going to be as strong as the forecasts are saying. So we could see 200% of GDP, I would say, debt to GDP. So yeah, this is what Jillian Tett is saying. This is the U.S. is having a bank-shaped recovery. Well, bank shaped, but backed by you, the taxpayer. And it's the banks, of course, who are benefiting. It's the 1% who have all the financial assets. Well, most of it. The 10% actually have about 80%, I think, of all the stock holdings, all the equity. So shorthand symbol suggests economy's direction and highlights power of Federal Reserve. I'm not going to go through the whole article, but that's the gist of it. It says at the end, the bottom line is this: central bank action can spark a V-shaped rally in equity prices, but on its own, it cannot create sustainable growth after that. Therein lies the reason why the current economic rebound could run out of steam, and why the symbol for bank is both a portent for the future and an illustration of the plight U.S. President Donald Trump faces as he tries to revive the economy. And as I said, Goldman Sachs, JP Morgan, all these big banks are benefiting from this, because all these programs are done through the financial system. So they always take a cut of everything. And that's why Goldman Sachs had such good results yesterday. So there you go. I wish I could bring you better news, but at least we know what's happening. Hopefully, I think we do know on this channel what is really going on, and we can continue to protect ourselves from what's coming. I think it's far from over. So now let's look at the markets. It's 8:40 a.m. London. Before I start looking at the prices today, I just want to touch upon the stock market, because at the end of March, I said that we looked like we hit a bottom, and I guess that was right. I made a video, and looking back at 1929, I said that I thought we'd have a rally for the next 13 weeks. And some people were asking me, what's your view now? Is that over, that rally? Or, are you going to revise your view? So I just want to show you a chart of the Dow. So I made the video back around the week, just after the market bottom on March 23rd. And looking back to 1929, I extrapolated that we'd have around 13 weeks of recovery. So this is where we are right now. The market topped, the Dow topped back in the beginning of June. That was week 12. So it wasn't the 13th week, but it was week 12. So it's pretty close. And since then, the market has gone down. Yes, it has rebounded in the last few weeks, but we haven't gone back above the high from that week 12. So that's where we are. We're still in a correction mode, I think. Did I say there's going to be a crash after week 13 or week 12? No, I said that we're going to continue to see the markets go down, that it could take longer, because back in 1930, when the markets had rebounded from the initial 29 crash, the market topped around April 1930, and it wasn't until I think sometime in 1932 that the Dow actually bottomed, and it lost just under 90% from the top in 1929. So yeah, I don't think we're going to see a massive crash to like 9,000 or 10,000 right away. I think it's going to be more gradual this time. It's not going to be as sharp as the initial crash we had from February to March this year. So that's where I stand on the stock market at the moment. So let's see what gold and silver are doing. Silver, of course, was doing very well. Last night, I saw we broke through 1940. Yesterday, I said that the high for the year had been 1965, and that's wrong. I apologize. That was the high in September last year, actually. So we are basically trading at this year's high in silver. We made a new high last night. Overnight, though, silver has come off. We're off 20 cents or 1%, but still above 19. We're at 19.18. Gold is just having a tough time breaking through 1810, 1815. I think 1825 is a key level. That's the highest monthly closing price for gold ever. So I think that's what the bullion banks are trying to keep gold under control for now. I think, yeah, gold is and silver, they're both your financial lifeboat, in my opinion. You really need to stay on them, on these boats. You can't go back to the Titanic. I saw today an article in the FT, a Wall Street guy saying, oh, you need to protect yourself against higher inflation in the next 18 to 20 months through Treasury protected securities or TIPS, inflation protected securities. And the guy said, well, gold is ballooned. It's not a good hedge. Do you really want to keep financing Uncle Sam and Wall Street by buying their phony TIPS? The guy doesn't even know what inflation really is. He thinks inflation is a measure of prices. He doesn't realize that the system is being inflated right now as we speak. Anyway, gold is at 1807, down about 3. Range has been 1805 to 1814. The Dow future is down 155 at 26,716, so down just over 0.5%. S&P 500 is also down just over 0.5% at 3209. I think yesterday during the day we got to unchanged for the year, but the S&P didn't manage to finish up on the year or year to date. So that's quite interesting there. The NASDAQ 100 futures down 100 points or 1% actually. So NASDAQ or the tech sector underperforming this morning. Sterling is down 0.2% at 125.62. The euro is unchanged, 114.10. The dollar is unchanged against the yen at 106.94. Dollars up slightly versus the yuan, up 0.25% at 699.75. WTI crude above 41, so we're picking up a little bit here in crude, but it's down overnight about 0.5%. We're at 41.06. And to finish off, as usual, the 10-year yield, we are down just over 1 basis point, just below 0.62%. So still very subdued, the yield. Still not a good sign for the economy or the markets. The key level here, I would say, is 0.6. That's been kind of support for the last few weeks. So there you go. Yeah, don't get distracted by all the politics, be it in the U.S. or in the U.K., by all the Cold War talk as well. That's like really silly, I think. China, Hong Kong, these are just distractions. We just need to focus as individuals on ourselves, on our families, on friends if you can help them, on your local community, and stay away from this fiat currency banker game that is going on right now. Try to stay away from fiat as much as possible. Only have enough in the bank to pay your bills, and yeah, keep producing more than you consume. That's the key, I think, to prosperity. And it doesn't come easy. Everything needs to be earned, in my opinion. There's no such thing as a free lunch. We can't fall into that trap of thinking like that. That's what the Keynesians, the bankers, politicians want you to do, because then they can keep playing this fiat currency game where debt is the main ingredient. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. Make sure you check if they haven't unsubscribed you, because I'm getting some funny movements in the subscriber count. It goes up and then it goes down. It's really weird. So you might want to check that, and also make sure you hit the little notification bell to be notified of all my new videos. I make a video every day. So there you go. And you can also follow me on Twitter, Facebook, and all these other platforms below here. So I wish you all a great rest of the day. Take care. Bye.